Yeah, well, welcome back to this place. Well, first of all, I want to start with your story, Henrietta. You're the co-founder of Carboculture, and you're on a ridiculous mission. You're about to remove 1 billion tons of CO2, which, if you do that, surely valuation and impact will be no problem at all. Can you talk to us about your story and the company you're building?
Yeah. I mean, for us, it's easy because sort of the more money we make, the more carbon we remove from the sky. So it's fairly parallel on the mission. And we remove carbon dioxide from the atmosphere, which is now necessary according to the IPCC as well. So it's not enough to just stop emitting, but actually also need to physically bring down carbon atoms from the atmosphere. And that's incredibly tedious. And so we leverage nature, natural systems which know how to draw down the carbon, but then we put it in our reactor and stabilize that carbon into biocarbons, which remain stable for 1,000 years. So that's what we do.
And how long have you been at this project?
Well, we started officially in 2016, but I think 2018, January, we raised our pre-seed round, which was, back in the days, it was $500,000, good old days, yeah. But when we started, there was no carbon removal market, so we were really pushing hard for anything to happen. And a few years ago, a few years ago, the European carbon markets then went up to 50 euros per ton, and that kind of like changed the game for us a lot. So the market started dramatically expanding, the prices went up, and then suddenly people came knocking on every door to get carbon removal. And obviously, when you're talking about a super physical hardware company doing like fundamental science, you don't like scale like that. So it's not like you go from 0 to 100 million ARR in 1 year or anything. And so now we're pushing the scale up in technological leaps forward and hope to get our commercial facility online in 2024.
Yeah, and when that happens, green capital will pour in, I'm sure.
Yeah, I mean, that's the thing with like us, that as a climate tech startup, you have to really look at so many different pools of capital, like where you can get it from. Like right now it's VC and grants, but definitely project finance is the way to scale for us. So really meeting those project financeability criteria, so you can access like green debt and other things where the check size starts from like 50 million onwards. And there you have to have a good enough project that's really vetted, like hard banking style, and then you can access hundreds of millions of capital. But really these first phases are the phases where you can't, like, you have to be a bit careful, because if somebody gives you 15 million to build a facility, like, you don't get another chance. So you can't kind of push the tech too hard. You have to actually get it right when you're building it, so that you don't screw up and then stay there.
Easier to change bits than atoms, I think. But that's your story, right? So, Johan, remind us of We Are Human and the mission you started on.
Yeah, slightly different. We set up We Are Human to be able to innovate and create services within health and education, which we at that time saw as the biggest kind of impact sectors, and they were struggling. And bringing a set of tools and processes for innovation. So inclusive design thinking, all those things that in 2010 really wasn't in more traditional places. It was happening elsewhere. And then We Are Human is set up, we're a co-created company, so we actually create our businesses with large corporates or universities, which is unusual when you're doing startups. So Kahoot was co-created with a university and a tech company, and We Are Human. Before that, I've done it with Mercedes and others. And the whole point with Kahoot, which is different to what we're doing now, was that we were actually not asking for permission. We looked at the problem, and then we designed the solution we thought would have the biggest impact to make education a way that engaged students and started a better journey. So the impact thing there was for us to actually break every rule to answer the question that schools weren't able to do, but on the premise of the teacher and the student, the most important, not the administration, the regulatory, and so on and so on.
I gotta ask, did you let your investors in on all of that story? Like, did they say, oh yeah, let's fund that crazy thing to turn around that gigantic ship?
Well, we did in the beginning, and then that didn't really work.
Yeah, no,
so,
of course.
So we didn't do that. Actually, one of the big investors asked me during a presentation, "Are you trying to make an NGO or a company?" So I was like, well, the NGO kind of thinking, but in a commercial setting is actually quite powerful. So that was a big problem. So we flipped that, and then we focused on the...
You had to remove that slide, I guess.
Well, we didn't remove
NGO
it,
thinking,
we
but,
played it down, and
okay.
we said, look at our insane growth. And we designed the company so that it had insane growth in the commercial space, in the social space. So on Fridays, outperforming Spotify in the US. That's what was interesting for the VCs, and then we're trying as hard as possible to retain the DNA of impact, which they liked, but it wasn't a value driver for them.
I'm sure I can see in the partner meetings from the VC office, they were like, trust the story, folks. There's a lot of growth here.
Yeah.
But I think if there's enough growth, or if the market is big enough, then you can put your impact company into VC speak and show that, look, there is so much potential here, and you can go after that. I'm sure it's more difficult if you're trying to do the right thing, because you're not paying for you are sort of paying for the negative effects that you might have, or
but it's
vice
a big
versa.
flip, though. When we did it when we started really the journey in 2009, and then there was no drive for impact. It wasn't asked. It was a question asked. Also not by the customers. Even the school wasn't really talking about what it really means for students' engagement. They were looking at the problems. Yeah. Now, when we're doing another one about the green shift in the blue economy, and again we're doing it with a big company in real estate, people are asking upfront, what are you doing for the world? Yeah. And I'll be part of how the municipality regulates us. They have all the requirements, they have ambitions which are so crazy that it's hard to match. So it's different, but we're still then dragging them along in a different way, because the methodologies and how you do it, and
Yeah, I think now it's like people might have goals, but they don't have a plan as to how to get there, especially with environmental stuff. And I just started listening to John Durr's book on the speed to scale, the climate change book. But basically he said that, starting a company is hard, and starting a climate company is harder. And I never say that because I don't want to moan about my job, which I love, but actually I think it's changing. There's so much momentum in the climate space that if you're starting a climate company with a very strong mission now, you can motivate people easier, you can hire easier. Like, there's top talent pouring from all sectors of tech and trying to get into climate, and even the kind of like plain vanilla top tier VCs will have some small allocation for climate stuff. Maybe they're not into hardware yet, maybe they're still in the kind of, we only do climate stuff that's software, which is basically what they funded before, but just call it climate. But now, like, they are starting to get there. So I think there's huge momentum, and it's not as difficult as it was, 7 years ago or something.
It's a different story now, because everyone now sees the challenge is clear.
Yeah.
I don't know how many IPCC reports we need to sort of establish that thing, but so all governments, all major companies, everyone now agrees and have allocated resources to decarbonize. The problem is they have no idea how to do it, right? Someone said yesterday, there is a lot of uncertainties here. So it means that if you find that solution, and if you grow fast enough to be in position, you'll raise that capital. You'll find the customers.
Yeah, and I think, the price on carbon has been the super critical thing for our sector, and I think that price on carbon is basically, it starts to make visible what was transparent before. So the polluters have to start paying, and the people who are actually doing something to remove the carbon get paid. So it's starting to match, and I do believe that it's going to be the same thing in other sectors, like, let's say, biodiversity. Super difficult to maybe, or much more complicated to measure, let's say, but I would wonder if there wasn't some sort of credits for that in the next decade to come, and then that'll help, again, companies who are addressing those problems to actually find the financial, meeting of that thing, and then that'll bring the investors in and so forth.
Yeah, so this is all using our existing language, right? And sort of what we do at Catapult, we use the venture capital model for growth, and we use an impact framework to solve problems that we think are worth solving, and that the market will adequately pay for. But here's where you get into, and I know you hate the unicorn language and all that bullshit. I'm guessing is
well, it's because
unicorn.
You can't say impact unicorn, because unicorn is about the value of the company for the shareholders,
Yeah.
which is the old problem, right? And the whole world says...
Isn't that what we all live to do, to create shareholder value?
No.
No?
And we have left that, right? That's why we have B Corps and others. So if you're going to talk about impact, we call it in Kahoot! Return on learning. You have to measure that first, and ROI is a part of that.
Yes.
Then you're truly an impact company, and you're moving forward. And actually, evaluation is always going to be a consequence of the success you're having.
Yep.
So why pointing at one aspect of what's going to make you successful? I actually think if Kahoot! Had been more impact structured, like B Corp and others, its success would have been bigger than it's now. It's struggling still to prove its commercial model in a world that's changing on it. Yeah. And I think, and for example, one thing we did in Kahoot!, we're talking to language. Yeah. So in now, we are humanists who set up to deal with neurodiversity. That's also why we had education and health, because they're completely connected. So people who are neurodiverse are forced into a system that doesn't fit them, and then they get problems, psychological problems and others, because it doesn't work. Like a left-hand person who's forced to go right-hand starts to stutter sometimes. Yeah. It's the same if you have HHD and other things. But we didn't describe it as that. We've described behaviors of students in the classroom, and then we designed the solution for them. If we had put a sticker on their head, we've gone into special services and other things, and it's impossible to be a solution. So the way we talk about things is how we program our culture. So when we let VCs define the language and how we measure, it goes wrong. So the VC model doesn't work for the world we want to live in, and it has long 10-year horizons they get money into, and then you can't change it if the world changes. So for the bigger problems we can't have a VC model only. It's only part of the solution. And that goes into the other problem is, it's always about the hottest thing. Right now we're thinking about climate. We are yet again going to address education and the dissonance between what people want to read and what the climate people, for example, knows and so on, because there's a problem. That's why we don't do it. Researchers want to write one thing and you want to consume something else. So what we're doing at the moment is exactly that same problem. We're meeting the same problems. The regulatory is setting stupid goals, the language they're using, blah, 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 blah. Sorry for the rant, but it's just...
No,
there's no value in... The people don't understand the things that comes before. They only focus on the project there and not understanding sometimes you have to address education to be able to actually solve the problem. Or else we could just repeat the old things.
Yeah. No, I'm just lighting a candle for... Yeah. For the poor North Zone partner who had to defend the return on learning slide, which is,
Well, he couldn't. He was laughed at, right?
Yes, yes. But I agree, of course, that this needs to change. However, we're in a world that puts a price on growth. We want growth, right? And to some degree, of course, I mean, there's a time value to solving these problems. So in one sense, you can say that impact unicorns, however we measure and call that right now, you want them to succeed now as opposed to tomorrow. You want them to grow as fast as possible because these companies, well, if they follow the impact framework, surely they have solutions that will be for the betterment of people, planet, and profit.
But this is the problem. The impact goals we have are systemic and long-term. And we're measuring ourselves on tomorrow, just like our politicians. We don't have the time. We keep on electing them on short goals, and then companies who doesn't just want to address tomorrow, who's going systemically, they are not seen as valuable. So the whole stock market and the way we strike, language we're using is super important. And those companies are struggling. That means all of us are turning around to investors and we're talking about the now. I mean, the problems we're in is a consequence of all the models we have until now. We all agree that where we're living now doesn't work, so why repeating the language on the model of the past? And this is the hardest thing, like systemic change.
Yeah, I think for climate, well, I can only speak from the climate sector because that's where my head is now. But in any case, I think for founders in these sectors, we really need to look at other sources of capital as well. Like, how can you diversify your take on the market? Because there is, like you're saying, that there are other goals. So, for example, when you build a factory removing carbon dioxide, you have to think of a 15-year return on investment, which is something that a VC doesn't want to touch. So there you're actually going on 2-3%, interest rates and stuff like that. But there are different pools of capital for that. There is a project finance sector that's ready to give you money for that, but you have to kind of get all these members to accept each other at the table. These guys are going to be like, who are these VCs and why can't we invest in the top co? And the VCs are going to ask, well, this sounds kind of like cumbersome to be raising this project finance and so forth. So it's just a new way of doing things, and everybody has to be okay with it.
Yeah, you're spot on, and that was my rant against the VC model. Is you could actually get property companies to build things which a bank will finance.
Yeah.
And then you can actually build the VC part on top, for example. And they are, like the new Green Deal in the EU, is putting a lot of money on the side that you can finance at the beginning. Kahoot would have never existed if it wasn't for Norwegian grants from the science whatever commercialization organization.
Non-dilutive capital?
And because they see the societal value.
Yeah.
So I think, and that's sometimes in the longer run. So I totally agree with you, and it is happening, and that's why politicians and other organizations and corporates are going to be probably the most revolutionary investors, not the VCs.
Yeah. No, fair point, but surely, a model where you are paid to sit for 10 years and wait, that must be the definition of patient capital, right? I mean, to some degree.
But VCs don't wait. They go in, intervene, push.
They want to have growth.
Yeah, they do.
Yeah.
I mean, that's why they have all these clauses that they can sell after a while. They chuck out employees. I mean, so the VC model is very impatient because looking for exits, right? They're forcing you to IPO, and they have all these clauses in. I'm not saying corporates and government are perfect, but there's definitely going to be better when there's a mix.
Yeah, and there maybe for any entrepreneur in the room, you might want to think that when you're raising capital from plain vanilla VCs or somebody, maybe you want to ask is this coming from, a fund might have their sort of moonshot range of investments that they put into their fund so that they can explain it to their investors that, hey, we have allocation for 3 moonshots and this is one of them. And so there they have a little bit of leeway where it's okay, this might be a little bit longer term, we're not expecting immediately fund returns and so forth. And then if you get an investor who's confident enough to actually sit there and say, yeah, we do believe in this company and it's going to take longer than everybody else, and that's okay. We knew that when we invested. Instead of somebody who's really nervous and trying to prove themselves to their own investors, it could work, and that's how we've been, at least so far, we've been having super good board work.
So figuring out what kind of post-it goes along with your name on the portfolio mix.
Yeah.
This is, we kind of hope that it will work.
It's about humans at the end, you do business with people, and
And trust between humans.
Yeah.
No, but that is, when you build this, you've raised capital from VCs that don't care at all about climate. They care about financial performance. And you think that's going to come, right? You invite people on your cap table that may have a more flexible view on the DNA of your company. Coming back to what Adebeo talked about, Arixol, they have a clear DNA. They have a clear idea on their theory of change. So he says, well, they will not deviate from that. But you can't decide everything once you invite more people in. That's part of diluting your ownership, right? But how do you work with that?
I think there's also another way to sell it. I mean, climate is just sure, it'll take us longer to build what we're doing, but it's the biggest market in the world right now. It is the biggest problem. It's a fundamental challenge that we need to solve. None of those VC funds are gonna matter if we're kind of in catastrophic climate change in 10, 15 years from now.
Yeah.
But B, it's just such a humongous market that I think the VCs kind of didn't want to miss out on it. So even if it's kind of not what they're used to, they're sort of putting their little toes in again and trying to see what's going on.
Yeah, I'm not saying all VCs are bad. And I do think you guys, I've invested in the capital because I do believe you're trying to do, but you're still investing in a certain type of company, so have the scalability to do things. And I think what's interesting...
It's not a very inclusive approach.
No. And it's fine for your fund. When I was just saying there's a need for a broader one. And I think you're right with the moonshots. Companies, I did this with Daimler, they've put 15 companies that has to be created to answer their future problem. People are going to drive cars, people are not going to buy cars, and so on. So they started modeling all of that and then creative services that will meet their future demand. Those type of companies are future looking, and they'll do it with external partners like with us. And that's the same thing that's where I learned the whole co-creation with corporates, because they can be long-term owners. They might be core to their business, and then you get other finances in the mix. Of course, if you are making Spotify, the VC model is great, right? But I don't think Spotify is going to solve our future problems. The problems we're going to solve are going to be more systemic, and that's why I think the discussion of conferences like this should much be more, how do we meet those needs? Of course, financial return is part of that.
Music was really important when the Titanic sank. At least they had a great soundtrack. The playlist thing.
Yeah, and that's maybe what Spotify is. Spotify is that band on top of the Titanic of the globe going down, right?
I'm not claiming that, by the way.
But I was
terrible
say,
joke.
a point of this to be kind of constructive is we're human. Once we did exited Kahoot, we saw that the ocean was not part of the school agenda. In the same way, it wasn't part of the ocean the Paris Agreement. Yet the revolution of the climate agenda started with Jacques Cousteau, who created first beautiful movies, then he started creating videos about the destruction of the ocean. He was taken off American TV. He still created the first Rio conference. He was the only non-political person there. And then all of a sudden, society took over. The ocean was forgotten, so it just was last-minute thing on the Paris Agreement. And we started looking at our education system. We're not teaching the ocean as part of our ecosystem, the economic ecosystem. So that was kind of our answer back, saying we have to do systemic change. And us as entrepreneurs have to be willing to go into systemic change, not only answering the VC model. Some of them can be VC model, but that should be part of that mix.
I think you have to have faith in the problems that you're solving, that like somehow this problem that you want to solve, even if there isn't a clear financial model yet, or even if it's not entirely clear like what kind of a market is forming, like you need to have that faith and just go in there and start building something that creates that value, maybe the other kind of value.
Which the VC model is great for, actually being patient to figure things out and finance founders who have a bold idea.
They're supposed to be venturous, but they're not always very venturous.
No. So you have to find the right ones then.
But there are things with the venture model. I was just going to say that, to your point, is if you build community first, so our approach is always to build community first, because they also becomes your customers, right, or your partners. So we know that from crowdfunding and so on. So the way we work with human investments is we invest systemically in things could be providers to our project who are part of our community. And they become your demand, and people like that, right? Also VCs and others. And then you're building yourself an ecosystem around what you're trying to build and the change, and you're learning from them. And I think VCs could you build funds which are more systemic in the way they invest to learn from each other, not just making a portfolio where one is going to return the whole thing.
So in a world then of blitz scaling, is this an argument for conscious scaling? For being a bit more careful about what you build?
Yeah, I think Jørn has better ideas of conscious scaling. There's been more of them, like Omidyar Network also made this kind of like a path to map out even a software company, like where are the pitfalls for scaling up too quickly. I think for us it's just like trying to push tech before it's ready is the kind of like rat race that we shouldn't get into, and trying to find the right people, even if it takes a bit longer to find them and so forth. Like those are things where it might be worth the 2-month wait or something, which is an eternity for a startup, if you can actually nail it, and then you can do things right from the start. I
mean, we have a lot of technology looking for problems to solve at the moment, and they're getting ridiculous valuations.
And that was 2021, right?
No, it's still like that, and that's part of the problem.
Party days are over.
I mean, some of the technology is interesting, but just needs to find a problem.
Yeah. So let's go back to financing real problems then.
Yeah.
Well, I think that sounds like a great way to close. And thanks for listening in. Let's continue the conversation during lunch. Thanks.
Rant over.